I call on the Minister for Finance to make his statement under Standing Order 43. Minister, you have up to 30 minutes.
Thank you very much, Ceann Comhairle. Since taking office in 2011, the Government has determined to fulfil the mandate given to us by the Irish people to repair the economy and public finances, to create jobs and to give hope and confidence to our citizens of a better future. The scale of the economic crisis that we have gone through has been unprecedented in Ireland's history. We have essentially lost a decade in terms of economic growth and job creation. Difficult decisions have been taken and huge sacrifices have been made by the Irish people. But this has not been in vain. Ceann Comhairle, the spring economic statement published today confirms that the path that has been taken was the right one. As we now plan for the remainder of this decade, our citizens have every reason to be confident and hopeful about the future. A future of steady, stable economic growth and a future with more people working in secure and sustainable jobs than ever before in the history of the state. A future of stable public finances that will deliver money in people's pockets, higher quality public services and strategic investment in essential infrastructure throughout the country. But I want to stress, Ceann Comhairle, such a bright future is not guaranteed and is contingent on a continuation of the policies and reforms introduced and being followed by this government. There are external risks, no doubt, but the choices taken within this House also matter. A return to, if I have it, I'll spend it, ways of the past, and indeed, even if I don't have it, I'll still spend it, policy stance taken by the opposition over the last 4 years. That's by far the biggest risk to economic growth and job creation and the prosperity of our people. Any rowing back on the reform measures, through, for example, narrowing the tax base, increasing taxes on work and on businesses, halting labour force activation measures, or reducing Ireland's competitiveness, will cost jobs, reduce growth rates and tax receipts, and reduce the living standards of the Irish people. Protecting and securing the hard-won gains of the last 4 years and building on them for the future is the priority. The facts clearly show that the policies of this government have worked and will continue to work in the years ahead. The economy is growing at the fastest rate in Europe, by 4.8% in 2014, and the Department of Finance is forecasting growth of 4% this year. Steady, stable economic growth of 3.25% on average is forecast for the remainder of the decade. The recovery is job-rich, with 95,000 jobs added from the low point in 2012. My department is forecasting that we will pass the 2 million people in employment next year, replace all the jobs during the downturn by 2018, and in total between 2015 and 2020 add 200,000 new jobs. Net outward migration is expected to cease next year, with a return to inward migration from 2017 onwards. The young people who have left are coming back, and they will continue to do so. The public finances are under control, with the deficit falling below 3% this year, and debt levels are set to move down towards the European average in the next few years. As a result, we will be in a position to implement another expansionary budget this year, and every year out to 2020, if this is deemed prudent and appropriate. We will meet our medium-term objective of a balanced budget in structural terms over the forecast horizon. The spring economic statement being published today sets out the policies to build upon the recovery and deliver these objectives over the remainder of this decade through a continuation of prudent, medium-term focused budgetary and economic policies that will secure sustainable increases in jobs and in living standards. The April 2015 update of the Stability Programme is also being published today and will be submitted to the European Commission later this week in line with our requirements under the European semester. The spring economic statement is part of a much broader reform of the budgetary framework. The next phase in this new framework is the National Economic Dialogue, which will take place in July. This will widen consultation on the budget with key stakeholders, while fully respecting the role of the government and the Oireachtas to make policy. The National Economic Dialogue is about ensuring we have an informed and mature discussion regarding both the short and medium-term priorities. Full details of these reforms to the budgetary process are included in Section 5.3 of the Spring Economic Statement, which has been circulated to everybody. Turning to the economic situation, I am greatly encouraged by the data flow over the last year or so, which clearly shows that the recovery is gaining momentum and, importantly, is becoming more broadly based. This is just the start of the recovery, and the figures tally with what I see on the ground. More people are working, people have more income in their pockets, people are more confident about the future, businesses are being created, and businesses are expanding. Following GDP growth of nearly 5% last year, as I said, my department is projecting GDP growth of 4% this year, with positive contributions from both exports and domestic demand. Over the remainder of the decade, the Department of Finance estimates that the economy has the capacity to expand by around 3.25% on average per annum. Economic recovery is yielding benefits in the labour market. The figures show, as I said, that 95,000 net new jobs have been created since the low point of the crisis, and the latest data show creation of jobs in 11 of the 14 sectors of the economy, reported by the Central Statistics Office. The Action Plan for Jobs has played a key role in bringing together all government departments, and the target of 100,000 additional jobs by 2016 will be met this year, a year earlier than committed. Unemployment has fallen by 5 percentage points since its peak, and we will continue to work to reduce it further. A continuation of the current strategy will see 2 million people at work by the end of 2016. The employment lost during the downturn will be fully recovered by 2018, and there will be more people working in Ireland by 2020 than ever before. Stable public finances are essential for economic growth, and the first task of the government was to stabilise the deficit and put it on a downward trajectory. However, the annual budget is not simply an exercise to meet a deficit target. The design of a budget is part of a much broader strategy to manage the economy for growth and job creation. In each of the budgets introduced since 2011, rebuilding the economy sector by sector has been a key feature. So unlike the past, we in the future will not be reliant on one particular sector, the construction sector for jobs and growth, and the transactional taxes that flowed from this. We must never again repeat the boom and bust economic model. Over the remainder of the decade, we expect all sectors of the economy to contribute to growth and employment. In some areas, such as tourism and agri-food, the approach has been about building on our comparative advantage and exploiting new external market opportunities. The reduction of the VAT rate to 9% in the tourism and hospitality sector, the abolition of the air travel tax, the tax changes to support farmers, gearing up for the ending of the milk quota, have all proven very successful. In other areas, particularly construction, the focus has been on repairing a sector that was hugely affected by the crisis. The government has presented plans to continue the sector-by-sector approach to growing the economy. I'd like to give you a few examples of the level of ambition embodied in those strategies. Our tourism strategy, People, Place and Policy, Growing Tourism to 2025, aims to increase revenue from overseas visitors by 1.5 billion to 5 billion euros, and to increase employment in the sector by 1/5 to 250,000 by 2025. IDA's Winning Foreign Direct Investment 2015 to 2019 aims to win 900 new investments for Ireland over the period to 2019. Creating 80,000 new jobs and 35,000 net jobs. It also sets an objective of winning 3 billion in new research and development investment projects. Enterprise Ireland's Driving Enterprise Delivering Jobs Strategy to 2016 sets out a range of actions and initiatives that will create over 40,000 new jobs in Irish companies, increasing Irish exports by 5 billion euros to 22 billion euros by 2016, and beyond that to 27 billion euros by 2020. The international financial services sector 2015 to 2020 policy targets 10,000 new jobs in the IFSC sector by 2020. Construction 220 sets out the government strategy for a renewed construction sector that can meet the medium-term demand for about 25,000 new dwellings a year over the next 15 years, as well as the other infrastructural needs of the economy. The government is driving a very ambitious and successful growth agenda for the agri-food sector under Food Harvest 2020. The strategy's targets amount for all the primary output of almost 6 billion was virtually achieved by 2014, while a 42% increase in exports and a 40% increase in value added by 2020 remains on course to be achieved. The rapid development of new payments technologies is fundamentally changing the landscape and throwing up new opportunities and challenges. The advent of SEPA has created a single integrated payments market in Europe for the first time that can be developed further. Ireland is already an attractive destination for international payment firms, but the government wants to maximise our potential in this sector of the economy and has taxed Enterprise Ireland in the IFS 2020 strategy with establishing a payments forum to review the positioning, opportunities and dependencies of this sector. Irish Water has set out an ambitious strategy to invest 5.5 billion between 2014 and 2021. The increased investment over the period ahead will be vital in ensuring communities can access reliable, high-quality drinking water and sewerage services, and our economy can continue to facilitate and attract water-intensive industries, ICT, pharma, chemical companies and agri-food, which combined currently provide well over 200,000 jobs. The investment is also required to prevent the massive wastage of water through leaks and to ensure a reliable, safe water supply for all our citizens. This broad-based economic strategy is supported by a domestically refocused banking and financial system, beginning to lend into a much broader range of sectors. Banking supervision has been improved with a strengthening of the powers of the central bank, while at a European level the move towards banking union is continuing. All of these will help prevent excessive credit growth in one sector of the economy in the future. It will also ensure that our SMEs and households have access to multiple sources of low-cost credit, an essential ingredient for growth. Addressing personal indebtedness is essential as our economy returns to strength. A mortgage is the single biggest debt most people will ever take on. The number of households unable to meet their monthly mortgage repayments increased with the decline in the economy as incomes fell and unemployment increased. Supporting homeowners in arrears has been a priority for this government, and a broad strategy has been introduced to keep as many families in their homes as possible. This strategy has assisted borrowers and lenders reaching agreement to restructure about 115,000 mortgage accounts already. As the economy continues to improve and incomes rise, the number of arrears cases is falling. However, there are over 37,000 mortgage accounts representing about 30,000 homeowners in long-term arrears of over 2 years. The government is actively considering a range of options to strengthen the mortgage arrears framework in order to ensure that families in long-term arrears can find a solution. For the majority of these families, the best route to a sustainable and binding solution is through engagement with their bank. Many others will find solutions through the options offered by the Insolvency Service of Ireland. The government intends making an announcement on the issue in the coming weeks. The particular focus will be on enhancing the role of the Insolvency Service and the range of solutions that become available through an insolvency arrangement. Access for credit to households is as important as access to credit to business. The mortgage interest rates being charged by banks in Ireland have not been reduced in line with the rate reductions by the ECB. I recently discussed this issue with the Central Bank Governor, and he updated me on the ongoing work that the Central Bank is carrying out on this issue. The Central Bank will report back to me in the coming weeks, and I intend during the month of May to initiate discussions with the 6 main lenders in Irish banking on the issue, and look forward to hearing their plans for reducing interest rates. Sustainable public finances are a prerequisite for improvements in living standards. This government is committed to prudent management of the public finances in the years ahead, and there will be no return to the boom and bust model of the past. This commitment is supported by the fiscal rules that are applicable to Ireland and indeed to all members of the European Union. The fiscal rules are designed to support economic growth. Over the last number of years, the need to bring the deficit below 3% of GDP has been the anchor for our fiscal policy. This was a hugely important commitment, and each year we set a target to reduce the deficit on a phased basis. Each year we overachieved on our target, sending a strong message to the public, to SMEs, to the FDI sector and to investors at home and abroad that Ireland was regaining control of our public finances. This in turn led to increased confidence, increased investment, lower interest rates and borrowing costs, and it supported growth and job creation throughout the country. Over the period 2011 to 2015, the deficit was reduced from 15 billion to 4.5 billion. However, we were in a position to achieve these targets with less tax increases and expenditure cuts than originally envisaged when the Troika was brought into the country. So now, since the last budget, and including the last budget, we've reached the end of austerity budgets, and we have done it much earlier than we planned. The Department of Finance is now forecasting a deficit of 2.3% of GDP in 2015. There are obvious risks in this forecast, and it is essential that discipline is maintained in the management of the public finances. With the deficit falling below 3% from next year onward, a different set of rules apply, and we will be required to make progress towards a balanced budget in structural terms. This will be the new anchor for budgetary policy, and it is designed to ensure that budgetary policy supports economic growth. Put simply, it is designed to ensure that the days of "if I have it, I'll spend it" are over, and this new approach will protect the Irish people from the boom and bust policies of the past. If these rules had been in place and properly applied and adhered to in the early 2000s, Ireland would have been far better positioned to weather the global fiscal crisis, financial crisis. As the House will be aware, the rules can throw up anomalies from time to time. I recently raised this issue with my European colleagues. What I was concerned to ensure was a credible application of the rules, not a change in the rules. And I am pleased to inform the House that the European Commission has accepted that we in Ireland have a strong point and have agreed to a change in the application of the rules. As a result, the Government will be in a position to introduce its second expansionary budget in October. Fiscal space of the order of 1.2 billion and up to 1.5 billion will be available for tax reductions and investment in public services. The final scale of the space will become clearer closer to the budget. The parties in government have also agreed that the agreed space will be split 50-50 between tax cuts and expenditure increases, and the actual measures will be announced in Budget 2016. The tables in the spring statement are based on a general split of 1.2 billion, but as the year goes by, I expect that by October's budget, this will be in the neighbourhood of 1.5 billion. Current indications are that a similar amount of space will be available in later years, while at the same time ensuring the achievement of a balanced budget before the end of the decade. We must continue to reduce the national debt. The budgetary strategy we are pursuing will ensure that our debt levels continue to fall, and we are well positioned to withstand any shocks that may occur in Ireland or in Europe or in the global economy. Reducing the debt remains a key priority, and the Government has been working hard to reduce the burden of this debt. We've succeeded in reducing the interest rates on the European loans provided under the programme, securing agreement to extend the maturity of the European loans, replacing the promissory notes with very long-dated government bonds, and replacing just over 18 billion of IMF loans with cheaper market-based funding. The national debt peaked in 2013 and is now on a firm downward path. It is expected to drop below 100% of GDP and move towards the European average in a couple of years. Our net debt, taking account of cash, the NTMA is holding, and other assets is of course much lower, and the figures for debt I have given are figures for gross debt. The cost of servicing the debt is also reduced. Interest rates on 10-year Irish government paper are below 1%. the lowest ever, and Irish government debt is now classified as investment grade by all the main credit rating agencies. So we are now in a much better position. Going forward, the fiscal rules require an annual reduction in the debt ratio by 1/20th of the difference between the actual level and 60% of GDP. Contrary to what some of the opposition have stated, this will not require further consolidation by way of tax increases and expenditure cuts. This is because with a growing economy, the debt to GDP ratio will fall once we run prudent fiscal policies. In other words, growth will do the heavy lifting. This is another reason why stable, steady economic growth combined with prudent budgetary policy is the way forward. Excuse me. The value of our investment in AIB, Bank of Ireland and permanent TSP continues to rise. It is not the state's intention to remain a holder of its banking investments in the long term. The exit strategy is about recovering the full cost of the taxpayers' investment in these institutions and using the proceeds to further reduce the debt. The sale of 25% of PTSB that concluded yesterday further improves the position, and I am now confident that all the taxpayers' money invested in AIB, Bank of Ireland and PTSB will be fully recovered. Unlike the $34 billion that the Fianna Fáil Green government put into Anglo-Irish Bank. The forecast for further budgets are contingent on continued sensible economic and budgetary policies being pursued. Prudent policies support growth, support job creation, and generate the taxes and the fiscal space for further investment in the economy. The scale of the fiscal space available in later years will be determined by the growth, and if the wrong policies are pursued, the economy will not grow and the fiscal space will not materialise. Equally important to the size and scale of the budget plans is the type of measures introduced. As I have stated, lower taxes on income will support more jobs, and higher taxes will cost tens of thousands of jobs. This is an economic fact. In the early 2000s, our taxation system became over-reliant on transaction and property-related taxes. The revenues from the property boom were used to fund a narrowing tax base for an unsustainable level and to fund current expenditure. The use of tax expenditures in the early 2000s not only served to hollow out the tax base, but led to an overheating of the economy. When the property bubble burst, the revenues dried up, and the consequences have been 8 years of tax increases and expenditure cuts. The response of the government of the day in the first instance was to load new and additional taxes on work through the introduction of the income levy and the universal social charge. We must never allow this to happen again, and the base broadening measures that have taken place have moved the tax base to a much more stable and growth-friendly footing, reducing the reliance on transactional-based taxes. The curtailment of tax expenditures, the introduction of the property tax, and introduction of alternative funding mechanisms for vital public services, such as Irish Water, are all essential elements for stable public finances. The alternative policy choice is in nearly all of these cases is to increase taxes on work, an alternative that can significantly impact on economic growth and jobs. That is why in my first three budgets, I did not increase income tax or USC charges. And at the first available opportunity in Budget 215, I used available resources to reduce income tax and universal social charge. Not only does this put more money in people's pockets, but it boosts confidence and economic activity all across the country. The Department of Finance estimates based on the ESRI economic model that the continuation of the programme of reducing tax and incomes introduced in 2015, if it is to be continued in 2016 and 2017 and 2018, it would increase employment by approximately 1%, the equivalent of 20,000 jobs. On the other hand, the same research shows that increases in taxes on work would not only result in the loss of additional jobs, but would actually reduce growth and cost jobs over the next 5 years. Unfortunately, the policies proposed by the opposition will do exactly this. They will increase taxes, increase expenditure, increase debt, lower growth rates, reduce tax buoyancy and cost jobs. The policies of the opposition will again cause the economy to spiral downward. In fact, The principal domestic risk to Ireland's continued economic growth is the tax and spend policies of the opposition parties. This government has a different policy perspective. The strong exchequer performance, coupled with very positive high-frequency data on the economy, confirm the appropriateness of the economic perspective of the decision to reduce income tax in USC for every worker in the country. Putting more money into the pockets of people has boosted consumer confidence and demand in the domestic economy. It will also encourage young Irish people who are working overseas in good jobs to return home, confident that they will be able to find well-paid jobs in Ireland. The government will continue to follow this policy in the next budget and in future budgets if the government is re-elected. The 12.5 corporation tax rate will stay. This is a red line for the government. We will continue to enhance Ireland's attractiveness for research and development by introducing a knowledge development box in the next finance bill. We have no reluctance to continue in parallel with our European colleagues in reforming corporation tax, but we will not, as many in the opposition advocate, increase the 12.5% rate. A growing economy is not an end in itself. It is a means by which we will improve living standards, create employment and deliver better public services to the Irish people. Economic recovery provides us with the platform upon which to build for a future of economic growth, job creation and increased living standards. I can't call and we must never again repeat the mistakes that left Ireland on the verge of bankruptcy in 2010 and resulted in a lost decade and such hardship in the lives of the people. The government's strategy of steady, stable economic growth will benefit all our citizens. It will provide the resources for investment in our public services. It will fund the building of new schools, health centres and essential infrastructure. It will deliver secure jobs to more people than ever before in the history of the state. It will put more money in people's pockets and give people security around their income and their pensions. It will entice our immigrants to return home, and they in turn will help to build a strong community in all parts of the country. I would like to thank you, Ceann Comhairle, and I look forward to the contribution from my colleague, Minister Brendan Howlin, and indeed from the opposition spokespersons on finance.
Thank you, Minister. I now call on Minister Brendan Howlin, Minister for Public Expenditure Reform.
The purpose of the spring statement is to set out our present economic and fiscal situation and to generate discussion about our nation's economic priorities over the medium term, not only from the members of this House but indeed from the broader Irish community. As the Minister for Finance has outlined, we're looking forward to having between 1.2 and 1.5 billion euros of fiscal space for Budget 2016. We will allocate these resources, as he said, on an equal basis between additional spending and reducing the tax burden on low and middle income earners. Additional investment may also be possible arising from reduced spending on unemployment payments as the numbers at work continue to grow. Today, Ceann Comhairle, is about recognising the point we have now reached in our recovery and then setting out the context for Budget 2016. Today is not an alternative to that budget. It is a point-in-time assessment of where we stand right now and the challenges we face. I want to outline some of the challenges facing public expenditure as our economy recovers. I'll also set out some of the priorities on which we will need to focus over the coming years. I'm confident that we can build on the progress achieved if we continue, as we've done for the last 4 years, to make the right decisions. Having come through the worst economic shock in our history as a state, our primary focus must be and will be on sustainability. The Minister for Finance and I share one overriding priority. That is to ensure that what we endured as a nation over the last 7 years never happens again. We will not throw away the hard-won progress the people of Ireland have made. As a result of the decisions we've taken, the state's finances are now in a demonstrably better position. The imperative now is to ensure that we continue to act responsibly. Last year, gross voted expenditure amounted to some €54 billion. This is a reduction of about €9 billion from the 2009 peak. During that period, current spending was reduced by nearly 10% and capital spending by half, albeit from historical highs. These reductions were made at a time of increased demands and increased pressures on our public services. This included significantly increased numbers of people needing unemployment payments, more medical card holders, and additional students in our educational sector. Unlike the private sector, which in a recession sees a fall in demand, the demands on the public services actually increase during a recession. In addition, as a nation, we're facing, thankfully, demographic changes that present challenges for our health and our pension system. A prudent plan for the public finances must prepare for these changes. The economic crash has taught us that nobody owes Ireland a living. We received emergency funding at a time when the markets stopped lending to us. We owe it to ourselves to ensure that we do not allow a return to that position again. That's why we have sought to broaden the tax base to prevent an overdependence on property and taxation and transaction taxes, which contributed to the crisis in the state's finances. On the spending side, we are now planning our expenditure on a multi-annual basis, rather than simply from year to year. We've implemented a programme of reforms to improve the state's budgetary architecture. In fact, today's economic statement forms the newest part of the reformed budgetary process. Additional reforms include the introduction of multi-annual expenditure ceilings, a regular comprehensive review of public expenditure, the publication of the updated Public Spending Code, the implementation of performance budgeting, and the establishment of the Irish Government Economic and Evaluation Service, all of which we've done in recent years. We brought a greater level of transparency and efficiency to the allocation and spending of public money. None of these reforms is in and of itself a game changer, and while they are yet to be embedded in the public mind, they do, I believe, present a fundamental improvement in the way we do the public business. It became fashionable, Count Corlem, for a while to decry this country and its potential. But the turnaround that we have achieved in our economy is indicative of the fundamental strengths of the Irish people and the Irish nation. We are now the fastest growing economy in Europe. Our recovery from this crisis has been as remarkable as our original descent into it. Ireland is a small, open, flexible economy with the ability to react fast to changing markets. Our population is comparatively young by European standards. We've developed an ability to attract investment that is the envy of the rest of the world. The days when we could plan our economy in isolation are long gone. We are reactors to, not drivers of, global economic demand. We are dependent on the international marketplace to sell our goods and services, and we are exposed to external developments. We've learned just how vulnerable we can be to a global downturn, exacerbated by domestic policy mistakes. Our purpose into the future should be to mitigate these threats where we can, to build into our economy resilience, and to focus on how we can continue to grow our economy. Success in these efforts will allow us to build the society that reflects Irish values. One that is fair, caring and decent. One in which people are rewarded for work. And one where every region and every individual county shares equally in the progress. Most in this House know that a fair society cannot be built on the back of a weak economy. The challenges that come with economic recovery have a context. Increases in public expenditure must be affordable. That's why the European Union has adopted rules to support sustainability. Endorsed by the Irish people in a referendum in 2012, the new fiscal rules serve as a tool to help us to responsibly manage our recovery. The rules mean that any future growth in public expenditure will not exceed the level of potential economic growth unless we specifically levy additional taxes to fund it. For a country like Ireland, where the national debt, as the Minister of Finance has indicated, is high, this is a lesson we don't need to relearn. These rules are new and hopefully will evolve over time and be refined, but there is no denying the fundamental truth at their heart. Public expenditure must be sustainable. We must plan carefully, using evidence-based decision-making to ensure that we invest the people's money in ways that will be of maximum benefit to the people of Ireland, not just for the next year or two, but over the medium and in the longer term. As I've already indicated, reductions in spending have made a significant contribution to the overall fiscal consolidation. However, our approach was never to simply apply blanket reductions to all areas of spending. In the context of a poorly performing economy and a weak labour market, we recognised that we need to support economic growth and protect our society's most vulnerable people to the greatest extent possible. Budget 2015 marked a very welcome point in our journey of recovery. It was the first time since 2009 that reductions in expenditure were not required to meet our set fiscal targets. Now, as outlined in today's fiscal forecasts and in the documentation before every member of the House, we prepare for Budget 2016 and look forward to increased gross voted current expenditure by an additional 600 to 750 million euros. This increase will allow government to deal with underlying demographic pressures in key areas such as social protection, education and health. It will allow us to target enhancements in key public services. Including these additional allocations, general government expenditure, excluding debt interest, is forecast now at just 32% of GDP or 37.5% of GNP. As a proportion of the overall economy, government spending is back now to roughly the size it was in 2001. Post-2016, the no policy change position outlined in the documentation before you is an annual increase of 300 million in current expenditure. Given the improvement in the fiscal position set out today, we expect there to be more space to accommodate additional spending. What we've done is simply after next year to put in demographic pressures. The extent of this space, as the Minister of Finance has indicated, will depend on continuing to pursue the correct policies. Ireland is changing. Over the last decade, our general population has increased by 500,000 people. We have the highest percentage of people under 15 in the European Union and the joint highest fertility rate. Life expectancy has also risen, and now almost 13% of our population are 65 years old. These changes are positive and welcome. They're the envy of many countries, but they also present service and resource challenges for our health, pensions and education systems. Our current projections, the ratio of working people to those over 65 is expected to steadily fall from the 5.5 to 1 that it is today to just over 2 to 1 by 2060. By 2021, the number of our citizens over the age of 65 will have increased by close to 40% from a decade earlier. This represents an extra 200,000 people. Overall, the portion of our population is projected to increase from 11% in 2010 to 15% in 2020 and to 24% of our population over 65 by 2060. In the health area, demographic changes alone will cost an estimated 200 million euros a year in the coming years. This is partly why our focus has been on extending the reach of primary care and taking pressure away from our acute hospital system. We may be a younger country than many of our European partners, but we too are facing pressure on pensions. We currently spend €6.5 million annually on pension provision. Over 400,000 people are in receipt of one of the two main state pension schemes, the contributory and non-contributory state pensions. The cost of paying for these two schemes alone is projected to increase by €200 million per year out to 2026. Let me be clear, Ceann Comhairle. There is no threat to the pension. This government is committed to pension provision and to sustaining the value of the pension. It is because of this commitment that in our discussions on spending, it's important to be clear about future trends. Not enough of our citizens are planning for the future to supplement state pension entitlements. It is in this context that the Taoiseach has set up a working group to examine the pensions issue. In education, the number of school children is thankfully set to increase every year over the next 6 years. By 2021, we will need an additional 3,500 teachers in primary and secondary level to provide education to an additional 50,000 pupils. The number of third level students is also projected to increase by 20,000 over the same period. These are welcome and positive developments, but we must plan for them. Our economic future is bright as our highly educated workforce expands, but we need to plan to ensure our public finances meet those real challenges. Of course, we need to generate resources by growing our economy before we can spend money. On its own, the state cannot create wealth. Instead, it must do all it can to create the right conditions for prosperity through progressive taxation, appropriate regulation and targeted investment. Later, Ceann Comhairle, I'll speak on a number of the key issues for which investment is required: employment, education, infrastructure, public services. But before I do that, I should state that an economy is not a society. A functioning society is a fair one, where the fruits of economic growth are shared among all the people. We are committed to continuing to provide necessary welfare and other supports to all that need them. And that's why, throughout this crisis, we maintained core social welfare rates. It is also why, in the last budget, we increased child benefit rates and the living alone allowance, as well as increased spending to address homelessness. It's worth pointing out that Ireland has one of the most progressive tax and welfare systems in the OECD. In fact, in the most recent figures that I looked at, only Israel, of all the OECD countries, has a more progressive income tax system. Continued investment and growth in our economy will give us the resources to assist those who need them most. This goes to the heart of our economic model. If we don't create the wealth, we can't redistribute it. We take a view that reducing unemployment remains the best route to recovery. It increases the tax base and allows investment in public services. By continuing to get people back to work, we make our recovery sustainable. Irish people want to work. This has been a central focus of our government's efforts. We're now starting to reap the benefits. Employment has increased in every quarter for over 2 years, and that trend we expect to continue. Almost 100,000 new jobs have been created since the low point of mid-2012. We are achieving success through a range of measures, including the Action Plan for Jobs and investment in key capital projects such as social housing. Tackling long-term unemployment will remain our key focus. Our Pathways to Work programme supports almost 260,000 places, with 85,000 of those reserved specifically for the long-term unemployed. In Budget 2015, we doubled the number of positions on the Jobs Plus scheme to 6,000, encourage employers to hire the long-term unemployed specifically. Not only is the headline unemployment rate important, we must also increase employment throughout the country for all groups in our society, in every county and in every region. With that in mind, we introduced the Back to Work family dividend in the last budget. A related issue is childcare. A successful childcare policy helps people who wish to participate in the economy. The Minister for Children has established a working group on this issue, and the government will look forward to reviewing its outcome shortly. Obviously, we need to find a balance between the needs of children, parents, and the wider economy. Our investment in research and development is also bearing fruit, with an increase in the number of Enterprise Ireland-assisted companies involved in this area, and an increase in the number of patents from the commercialisation of publicly funded research. All of these initiatives are aimed at providing real opportunities for those in need of work and allowing those who are forced out of Ireland in recent years to come home. This government has overseen improved outcomes in education, more students at higher level, more students taking higher level maths. There's increased literacy rates among our 15-year-olds and increased numbers of PhD awards by Irish universities. This reflects the belief that the quality of our education system is a key determinant of future living standards. In the last budget, we announced 1,700 additional new full-time education posts. In the lifetime of this government, over 150 new schools will have been built. It's extraordinary that we built more schools in the worst recession in our history than they did in the boom years. At undergraduate and postgraduate level, we're providing higher education programmes and services for over 164,000 full-time students. We're providing 270,000 places on further education and training programmes. And we will continue to invest in education. We must embrace the skills revolution, adopting strategies to ensure continuous upskilling and development of our workforce to allow our citizens to be at the forefront of new technology and the creation of high-value jobs. The potential of the Irish people is enormous. Our aim is to help the Irish people realise that potential. Thanks to our economic recovery, we are now in a position to increase investment in our people and in our infrastructure. We will do this, Ceann Comhairle, in a strategic way. We will ensure maximum value for money with a focus on future needs. The capital review undertaken by my department will inform a new capital plan which I intend to publish in June. This plan will take our funding horizon on the capital side out to 2020 and identify priority areas for investment. Infrastructural constraints can act as a brake on growth, reducing the productive potential of our economy. We also need a proactive approach to dealing with climate change and its future impact. Investment is needed in parts of our school system, in parts of our road network, public transport, social housing, broadband and flood alleviation. Spending in these areas will increase our capacity for growth, our ability to respond to social needs and balance our environment. As I already indicated, capital expenditure has fallen considerably since peak. That was the correct thing to do at the time. We simply hadn't got the money. There is no point in investing to extend one house if one can't afford the grocery bill. But it's now time to invest again and to meet our infrastructural needs, and this will be reflected in the capital plan, particularly in the years beyond 2018. Having served in government for the last 4 years during this crisis, I am proud of how the public service has responded to the additional workload and the productivity demanded of them. These changes and reductions in pay have allowed us to minimise the effects of the crisis in essential areas such as health, education and social protection. Indeed, public service reform has allowed us to provide additional resources, as I've indicated, to frontline services, a process that I, Ceann Comhairle, have called the reform dividend. We have added over 1,000 nurses since 2014. We recruited 300 Gardaí last year, and we'll take in 250 more this year. We are hiring 920 additional mainstream teachers, 480 resource teachers, and 365 special needs assistants this year. As well as being more efficient and productive, the new public service must be more responsive to the needs of service users and more strategic, focused on longer-term outcomes. This will involve, Matty, harnessing the potential of digitalisation and data. It will also involve the use of alternative models of service delivery to better meet the needs of users. I'll explain that later to you. Earlier today, Ceann Comhairle, the government agreed to my proposal to enter into discussions with the trade unions on the issue of public service pay. The pay reductions are governed by financial emergency legislation that require me annually to review the status of that emergency. As the economy continues to improve, the prospect of legal challenges to the financial emergency increases. It is prudent, therefore, to plan for the orderly unwinding of these emergency provisions. Not to do so would be foolhardy. I don't intend to obviously discuss the negotiations on the floor today, but let me say this, Ceann Comhairle. All public servants have had their pay reduced significantly. Over the last 2 years, we've seen the beginnings of pay awards in the private sector. And as the economy recovers, we need to ensure that remuneration and the cost of the public service generally are managed to ensure that they remain sustainable. Of course, without the productivity gains made in recent years, we would not be in a position now to discuss the unwinding of FEMPI. Given their value to the state, the unwinding of these measures will take time. To do anything else would be to jeopardise the public finances again, something as a government we will not do. In order to meet the challenges that we face, it's essential that we engage with people. This spring economic statement represents the beginning of that process. Every government has a duty to engage with its citizens. The government also has a responsibility to ensure that policy making is consistent with broader societal and economic objectives. A national economic dialogue between government and relevant civil society groups will discuss the most effective and equitable way to achieve our objectives. These groups will have obligations too, and that goes not only for groups who want more expenditure in every area that we can think of, but also of the parties opposite. We cannot meet all the demands of each and every person or group. To try to do so would bankrupt the state. Proposals for increased expenditure should be matched by genuine attempts to find matching fundings commensurate with the proposed expenditure. No party can ignore the general parameters under which public policy has to be made. Our engagement with all groups as a government will be firmly rooted in these parameters. While these discussions will inform the process, it is the government of the day that will make the decisions. It will do so on the basis of what is the long-term best interest of our people. In concluding, Ceann Comhairle, I want to repeat that we must not allow this country to return to the devastating cycle of boom and bust that has been the hallmark of previous administrations. We must learn the lessons of the past decade and not repeat the mistakes that brought us as a country and as a society to the edge of ruin. Our vision and plans for renewed prosperity will not be built on the sand of short-term or unsustainable increases in government spending. It will be built on the rock of fiscal responsibility and investment in the productive capacity of our people. Since 2011, we've provided stable and responsible government. We've stood up for the Irish people and charted a path to recovery. We cannot and will not throw money at problems. Expenditure growth must continue to be linked to performance and to reform. Any increases in expenditure and incomes must be in line with growth and productivity. Decision-making must be evidence-based, with a strategic focus on improved outcomes for our citizens. We've come a long way, Ceann Comhairle, since the depths of our economic crisis and the fiscal crisis, a crisis that was supported and cheer-led by some of the more vocal people opposite. The clear evidence presented here today proves that fact. Our task now is to map the next phase of our nation's journey. This will be a country that creates good jobs with secure incomes, a country that provides well-run public services, that listens and responds to people's needs, that builds real communities and provides real opportunities for all our people.
Thank you, Minister. We now, sorry, with those members who wish to leave, would they do so quietly, please, until I call the spokespersons. Thank you. Sorry, if you have your chats outside, please, I'd appreciate it. Thank you. Now, the opening statements of the spokesperson for Fianna Fáil, Sinn Féin, the technical group, who shall be called upon in that order, shall not exceed 45 minutes. So
Sure.
you share to 45 minutes. Okay?
Thank you very much, Count Corley.
Thank you.
Count Corley, this